That's me. Hey everybody, welcome back to Your Mortgage Moment. Sami El-Farram, Principal Broker at Total Mortgage Source, and I'm very lucky to have Ms. Lisa Martin joining us once again.
Hi guys.
So we did our last video last week talking about locking in your mortgage, whether you should go with a 5-year or stay with a variable, and the cost of refinancing. So from that video, we've got a few more questions. So Lisa, what are we seeing happening right now?
Oh, you know what? I guess the next biggest question that people are saying is cash flow. I mean, if you look at the price of inflation, everything from a quart to milk to gassing up at the pumps, and including, unfortunately, your mortgage payment, everything is so much higher. And I don't know about you, but I haven't gotten a raise.
Everything.
Have you gotten a raise?
No, I've not gotten a raise.
I know. Some jobs, they do give you cost of inflation raises, but not everybody is as lucky as to have that. So I want to show you how to improve your cash flow with your mortgage.
Oh, that'd be perfect, Lisa. Now, basically what we're saying here is outside of your mortgage payment right now, we're talking about credit cards. We're talking about just additional bills that we have there, maybe unsecured lines of credits. And we're talking about combining everything. Is that where we're going?
Absolutely, Sammy. Yeah. You know what? I want to actually give you an example because it'll really help kind of pinpoint and put this into perspective. Okay. So this is a deal that I just did recently for a client. So she had a balance of $140,000.
I interrupt you real quickly. If you guys hear a little click clack, you're going to understand why in a couple seconds. Go ahead.
So my client, she had a balance of around $140 left on her mortgage. Her term is coming up. Her current rate was I think it was like 2.35 on a fixed before, right? But right now what I want to do is she has $60,000 in combined unsecured debt, costing her about $950 a month.
So that $950 is outside of her mortgage, outside of everything.
Yep, and then she pays $1,400 a month on her actual mortgage.
Oh, wow.
So what I've done is I've consolidated everything. I've given her a new mortgage of $225,000 because she wants some extra cash. I've done it on a variable, which we've already talked about, at prime minus 0.40, which equals 3.3, and that made her payment total $1,280.
How much?
$1,280 a month. So that includes all her debt. That includes her first mortgage, and it also gives her an extra $40,000 for home renos and extra stuff. Maybe she wants a vacation. Who knows? Maybe she just wants that extra cash flow to compensate for the extra costs of everything in life right now.
And she's completely debt-free at this point with $40,000 to do renos.
That's right. And her new payment is $1,280, and that's a savings of $1,070 per month. I'd like an extra $1,000 in my pocket.
Oh, for sure. And Lisa, with clients with this cash flow, that's a huge savings. What if cash flow isn't as much of a problem? Or, for example, if you're saving $900 a month, what if they wanted? What could they do with that extra money if they wanted to?
Good question. So what I suggest they do with at least half of that is utilize their prepayment privileges. With every mortgage, or at least every one I can give you, you will have prepayment privileges. So that looks like in two different buckets. You can probably do 20% to double up, depending on lender, on your actual mortgage payment. And you can also do roughly 15 to 20% of the total mortgage amount each and every year. So I don't know about you, but I never make enough extra money to be able to utilize all of that. But basically, even if you put an extra $500 a month on your mortgage, it's going to slam right down your principal. And then if the rates happen to go up on the variable, it's not so much of a hit because you're already paying that extra little bit amount.
And let's say Christmas holidays come up and they don't want to make that extra payment. Can they pull that payment back?
100%. It's a phone call or an email, or you go right online and you switch that. Super easy. You have total control over that. And it's all basically with no extra cost from your lender. It's the prepayment privileges, which are awesome. And you know what? Not a lot of lenders or maybe even mortgage professionals tell people about that. So I wanted to share that.
That's huge. That's fantastic. So based on what we were discussing last week, guys, and based on what we just discussed today, it looks like this is the way to go. And if you guys are wondering what all that click-clacking is all about, we had a little guest here. Lisa's little piglet, Phoebe.
Hi, everybody. This is Phoebe. She's my little French bulldog. She's a little over 2 years old, and she's a sweetie. Hi, everybody. Put your mortgage with Total Mortgage Source.
Yeah, that's great. Thanks again, Lisa, for joining us.
Thank you.
Guys, have yourselves a great week. We'll talk to you soon.